Today, I'm joined by Cheryl Cohen and Libby Starling. As Bruce just said, Cheryl is the governor just said that Cheryl is the new executive director for Montana Housing. She started in October of 2018 as the operations manager. She has over 15 years of affordable housing, compliance, property and asset management, and operations experience. And she holds a BA in political science of Washington. We're also joined today by Libby Starling, who is the community development manager with the Federal Reserve Bank of Minneapolis. In this work, she leads the Fed's efforts to promote policies supporting housing affordability. And that's part of its work to advance the economic resilience of low to moderate income individuals and communities. She has previously worked with the Twin Cities Regional Planning Agency and the Minnesota Housing Finance Agency. We're very glad to have her joining us today. My name is Julie Flynn. I'm the Housing Development Program Manager. I've been back in the housing world with the state of Montana for the last couple of years. I was hired way back in 2000 by Connie Onstead and Bruce. So it's been a good 20 years. For our presentation today, I'm going to speak very briefly about some of the adjustments that the U.S. Department of Housing and Urban Development has made in their programs of funds that come to Montana. And then Cheryl will present on Montana Housing's work that in response to the coronavirus, and then Libby will finish up by sharing some of the national trends and federal responses that we have. All right, so the U.S. Department of Housing and Urban Development, or HUD, provides funds to the Montana Department of Commerce and Public Health and Human Services, and those funds are distributed throughout the state. HUD, as part of the CARES Act, has provided additional funds to our regular allocations that we receive, which are outlined there in the slide. Montana typically gets between $6.8 million in community development block grant funds. HUD has provided an additional $7.3 million for efforts to respond to the coronavirus. Billings, Great Falls, and Missoula have also received some funds for that same purpose. The Emergency Solutions Grant goes to the Department of Public Health and Human Services in Montana, and they are receiving a significant amount of funds from HUD to continue their good work that they do. Typically, Montana receives about $750,000 for this work, and now it will be about $9.3 million. I added an additional bullet here that tribes have the ability to access some CDBG CARES funds as well. There's $100 million nationwide, and so tribes can access those funds working with their HUD folks directly. So I want to just briefly touch on some of the waivers, some of the adjustments that HUD is making to its programs to distribute these funds and to react more quickly to the changing environment. They have extended the deadlines for when we need to report on our work to HUD. They've shortened some of the public comment periods from 30 days down to 5 days. They have increased the public services cap that that the Community Development Block Grant Program has. They've placed an eviction moratorium on properties that are assisted with home funds, and those that have loans from the Community Development Block Grant Program. That moratorium extends through July 25th of 2020, so longer than the moratorium that we've had at the state level. HUD has postponed or allowed us to postpone our on-site inspections. So we will not be visiting your properties this year, which is for us one of our favorite parts of the work that we do, is getting to see, to meet residents who live in the properties that we help finance. For the home program specifically, we're not receiving additional funds, but HUD has waived some requirements. We're no longer, for the next few years, we're not required to have a set aside for community housing development organizations. We are not required to submit match documentation that we've received match for our federal funds. We can allow residents to initially self-certify their incomes rather than requiring support documentation. That's recognizing that folks may be in crisis. Again, our on-site inspections are postponed, and home funds may be used within the period of affordability for properties that are already were constructed with home funds. In part, additional home funds may be invested in those properties under certain conditions. So if you believe that you have a property that still is within the compliance period for home and you're running into operating issues, please contact us and we'll run through what the possibilities might be for that. What has not changed are the requirements to comply with fair housing and non-discrimination laws. So that is a good thing that HUD has retained those requirements. The environmental review requirements have not changed, and the labor standard requirements have not changed. So there's no compliance with those are still necessary. One other thing that has not changed, we do plan to go forward with our September 15th deadline for our regular community development block grant funds for housing and public facilities applications. And we have the same proposed deadline for home and housing trust fund applications. So be in touch with us if you have questions about those deadlines. Okay, so I just want to touch briefly on what the Community Development Block Grant coronavirus funds will be used for, or what the intent of the program is. We don't have a lot of detail at this point. We're waiting for the Federal Register notice. I made these slides a couple weeks ago, and I had in here that the Federal Register notice was expected this week. So I had to change it to soon because we keep thinking we're going to have it. And we'll have more details once that is released. The general idea is that we will have the same eligibility requirements as our normal Community Development Block Grant Program. Commerce is coordinating closely with other agencies, other programs, to ensure that there's no duplication of benefits between what we're proposing to do and what other agencies are doing. All of the funds must be used to prepare for, prevent, or respond to the spread of coronavirus and the impacts that it has had. So that's very broad. Stay tuned. We'll hope to have more information soon to communicate to our housing world. The Emergency Solutions Grant coronavirus funds will similarly follow the same criteria that the Department of Public Health and Human Services currently has for their Emergency Solutions Grant program. They distribute those funds to the Human Resource Development Councils around the state through a formula that's based on the population size and the poverty proportion and the counties that those Human Resource Development Councils serve. Again, the funds are to be used to prevent, prepare for, and respond to the coronavirus. And the Emergency Solutions Grant is particularly meant to address the needs of Montanans who are experiencing homelessness and for the organizations that provide services to them. And so we've listed the potential uses there. So now I will turn it over to Cheryl to present on Montana Housing's work. Please, we'll have our contact information at the end and look forward to taking your questions. Thank you.
Thanks, Julie. Can everyone hear me okay, I hope?
Mm-hmm.
First, I want to just give the caveat that we're all, most of us still working from home, including myself. And I have the joy of being home with a 2-year-old and 2 large boxer dogs, and we get up rather early and nap time is approaching. So if you hear some noises in the background, my fella's got it handled, but that's my kiddo. So,
hey Cheryl, sorry to interrupt, but
the slide deck.
Cheryl, you're a little quiet.
Okay, let me see if
Get a little closer to your mic, or
is that better?
That is fantastic, thank you.
Great. Okay. And then have I taken over the slide deck, or Julie, are you queuing it back up?
I'm queuing it back up. We're ready.
Thanks. So I'm so glad to be here with all of you today. It's of course a little awkward that we're all just talking to our screens, but I guess we're getting used to it. So I'm going to go through some Montana housing guidance on COVID-19 that we've had on our webpage, including some highlights of consumer protections, some frequently asked questions, and various program adjustments. I'm going to also mention briefly information about mortgage forbearance and what Montana Housing has with the borrowers that we work with. And we'll talk a bit about the Emergency Housing Assistance Program, which I think is probably what many attendees might be interested in hearing an update about. I'll be covering pretty high level, so I've included the links to the web pages for all of these. So please, for more information, go to the websites for additional information. Go ahead, Julie. Oh, I can drive the bus. So first, in the video from Governor Bullock, he did mention the consumer protections that were part of various directives from the governor's office that were released throughout the COVID emergency to limit foreclosures, evictions, and disconnections from service. These were concluded on May 24th, but there is an exception for persons who are meeting the definition of vulnerable populations. So for vulnerable populations, the directives continue on for 30 days after they either cease to shelter at home or the end of the emergency. But for these individuals, they still need to make a basic showing to their bank, landlord, or utility that they are indeed continuing to shelter in place at home, that they do meet the definition of a vulnerable population member, and that they are financially impacted by COVID. And they need to meet all 3 of those criteria in order to continue to be eligible under the directive to limit foreclosure, eviction, or disconnections from service. We've provided some FAQs on our website about this, so again, please check them out. But I think this is important to know for particularly individuals who are over 65 or have compromised health conditions, that there are protections for them that can continue in place. Go ahead, Julie. So again, we have some frequently asked questions posted on that website. One is around homeowners. So many of you may know that under the program, and let's go back one slide deck here. Thanks. Under the CARES Act, the Federal CARES Act, borrowers who have a federally backed mortgage are eligible for forbearance program. So that means that their payments can be deferred or delayed, but they'll still owe those payments. But they won't have to accumulate late fees, and they won't have derogatory credit reported to credit bureaus. There's also a really handy guide from the Consumer Finance Protection Bureau, the CFPB, about coronavirus mortgage relief options. The FAQs, as I mentioned, also include some questions about the governor's directives for consumer protections, including what sort of documentation renters should be prepared to provide to landlords to continue to meet that eligibility if they're a vulnerable population member. And just really want to state that they're not required to provide specific health diagnosis information. We recognize that people have rights under HIPAA laws, but they may just need to say, you know, I do meet the criteria and leave it at that. So please visit the FAQs on our website. And if you have clients that you're working with that are asking questions, please direct them there as well. Go ahead, Julie. So a few program adjustments that we've made, and these are just high-level summaries. Again, go see our website. But for our multifamily programs for housing credit properties, site visits have been postponed, and we're gathering compliance audit and file reviews electronically and conducting them that way. We also have permitted delays in income recertifications. And there's a link to some guidance from Nova Gradic on flexibility for low-income housing tax credit and bond development programs. Our home ownership program is continuing to purchase loans and remains operational. We have issued some guidance for lenders and partners specific to changes that we've made in the program. So please, if you're a participating lender or a partner that may be working with an interested homeowner, home buyer for the program, please refer them to our guidance. Go ahead, Julie. The Housing Choice Voucher Program, Housing Urban Development released options for public housing authorities to adopt various waivers. And we've exercised our option to adopt a number of those waivers and have posted the list of those that we've adopted on our website. And we've also provided that to the 11 field agencies that we work with throughout the state. And there is a HUD resource available on COVID-19 FAQs for public housing, housing choice voucher, and other programs. And finally, we are resuming project-based Section 8 management and occupancy reviews. So this is kind of a new development, and those are being scheduled, and our staff are now out in the field. They do have proper protective gear, and we'll be working with on-site staff for the properties they visit to ensure that they're taking all precautions that are appropriate. Okay, go ahead, Julie. Next slide, Julie.
Sorry, it's not letting me advance it.
No.
Okay.
Great. So similar to other mortgage servicers, Montana Housing Services loans, we service about 5,000 loans in our portfolio. And I think we went one too far, Julie. Thus far, we've received just about 100 forbearance requests from our borrowers, which represents about 2% of our portfolio. So actually doing quite well. One more, Julie. Sorry, it's glitchy, guys. Thanks for your patience.
Very sorry, it's delayed.
For mortgage forbearance, our delinquency staff are working with our borrowers to make sure that they have information about the Emergency Housing Assistance Program and can apply to that program. And we've had to review all of the newly released guidance from, FHA and the VA and USDARD, and ensure that we're meeting all of that guidance. So our mortgage servicing team and compliance have been working very closely together to make sure we're adhering to the new requirements. We are asking borrowers to submit a forbearance acknowledgement form. And we really talk that we have to follow the guidelines set forth by the insurer or guarantor of the loan. And so that means we can offer loan modifications or payment plans, but we can't defer payments. So at the end of the forbearance period, there may be a partial claim or a payment plan or some other option to work with the family. But again, we're encouraging all of the borrowers that have requested forbearance to apply for the Emergency Housing Assistance Program. Go ahead, Julie. All right, so moving on to the Emergency Housing Assistance Program. There have been two phases for this program. The first phase, which may not be as widely known for folks on the call, is Montana Housing had been allocated $430,000 of temporary assistance for needy family funds some time ago. These are our TANF funds. And the governor's April 13th directive permitted us to use those funds for grants instead of loans. So we were able to launch this program and take applications April 17th through May 6th. And this was specific to households that have minor children. So I think there was some confusion when it initially launched because the TANF language was used. But TANF cash benefits under the Department of Public Health and Human Services have different criteria than the TANF funds that were allocated to Montana Housing. So it really just meant that we were serving families that had at least one minor child in the household. The eligible family needed to have a loss of income due to the COVID-19 emergency. And we had income limits that were tied to that fund source at 200% of federal poverty. So for a family of four, that was a monthly income of $4,367 or less. And we set that readily available assets, which we considered checking or savings accounts, needed to be less than $3,000. We weren't looking at other types of, college saving funds or retirement accounts, anything like that. Go ahead, Julie. So there was, again, some confusion. Families thought that they needed to be receiving TANF cash benefits in order to be eligible, but that's not the case. And our program limits under our program are different from the TANF cash benefits program administered by DPHHS. Our income limits were actually a bit higher. Our multifamily program staff has been administering this program, and it's limited to rent and security deposits were due April 1 or later. And under this program, we'll pay 100% of the rent or security deposit for the eligible households. Go ahead. So to date, we've received about 175 applications. We did conclude the application period to coincide with the launch of the Phase 2 program, just to eliminate potential confusion. But we're still working through the applications that we'd already received. Over 60 have been approved, and there are about 115 in process. About $130,000 of funds have been awarded. And we'll continue to provide ongoing monthly assistance to eligible households. So if a household applied and they were delinquent April, May, and June, and we helped provide assistance for those months, we'll ask them if they continue to need assistance for the month of July, and if they continue to meet the eligibility, we can continue to support those families. So a couple of challenges in the program is, receiving incomplete applications and the time that it takes to review the application and correspond with the applicant to get the information needed in order to approve the application and move it forward. And the program also makes the payments directly to the landlord. And so we need documentation from the landlord, like a W-9, or if they want funds via electronic fund transfer, then we need bank account information. And we also ask for a certification and verification statement that they're, maintaining the unit in accordance with tenant-landlord law. Go ahead, Julie. So I'm going to talk about phase 2, and just to make sure that we have time for Libby to do her full presentation, I think I'll just continue to go through and hold your questions in the chat, and then we'll try to get to as many of those at the end of the presentation as we can. Was there one more slide prior to this, Julie, for phase 2? Great. So this program launched on May 7th. It utilizes $50 million out of the $125 billion from Federal CARES Act coronavirus relief funds that were awarded to Montana. Eligible uses, it expanded from the phase 1 to include homeowners as well. So in addition to security deposit and rent, we can also cover mortgage payment. And if the homeowner pays for their hazard insurance directly, if it's not part of their mortgage payment and escrow, then we can also assist with hazard insurance. So one of the components about this program and the CARES Act funds is there needs to be a nexus between the financial hardship experienced and the COVID-19 emergency. So that's what we're looking for when we're reviewing applications. So it could be a job loss or closure of place of employment, reduction of compensation, or some other obligation to be absent from work and an inability to work remotely. So this could be, due to public school closures or daycare closures, or a requirement to quarantine due to, your own health, or if you're a member of a high-risk population. So again, it just needs to show that nexus between the financial hardship and COVID. Some other threshold eligibility criteria include that you must live in the state of Montana, and it must be your primary residence. So no vacation homes or second homes. And the asset limits for the program were set higher than the phase 1 program that was tied to the TANF and the 200% of federal poverty level. So for 1 to 2 person households, $75,000 a year, 3 to 4, $100,000 a year, and 5 or more, $125,000 a year. And this is the income, based at the time of the COVID impact. So not what you filed for taxes last year, or what your pay stubs were looking like, back in December and January before the COVID situation really got underway, but at time of the impact. And the readily available assets limit under phase 2 went from 3,000 to 10,000. And this was an acknowledgement that, people work really hard to save funds. And it's really important for families, if they've been able to save funds, to continue to have a rainy fund for unexpected costs or repairs. Your hot water heater goes out, or you have unanticipated medical bills. So we didn't think that it was appropriate to ask that families spend down all of their savings that they'd worked so hard to build in order to make their payments. So we did not include the stimulus checks under the CARES Act in either the income or assets calculation, but we have included the unemployment insurance $600 a week federal enhancement. And that's prompted some questions as that $600 a week is excluded from other assistance programs like Housing Choice Voucher or Housing Credit. But that is a substantial amount of income. So the decision was to include that. And our understanding is that $600 a week enhancement will be ending in next month in July. So we may see some increased impact on families that had been receiving it that will no longer be receiving it. Go ahead, Julie. So households receiving other forms of rental assistance like Housing Choice Voucher, USDA, or Emergency Solutions Grant aren't eligible for rental assistance, but they could be eligible for one-time assistance for security deposit. So we've made some adjustments to our application to try to make that more clear. And whereas phase 1 covered 100% of the rent, this program pays the difference between 30% of the household's gross monthly income and their eligible housing costs up to $2,000 a month. So there is kind of the fair share contribution from the family that's a component of this program. Security deposits, however, are paid at 100%. And we really wanted to stress that homeowners that are participating in forbearance programs are eligible and they can use funds to become current. Go ahead, Julie. So to date, we've been using existing state of Montana personnel for the administration of this program. We have about 40 staff, about 24 FTE that are assigned to stage 1 reviewers, and they're comprised from 10 different state departments. So it's really been an all-in effort on behalf of the state to allocate resources so we can get these coronavirus relief grant programs launched and appropriately staffed so we can review applications as quickly and diligently as possible. We have 6 stage 2 reviewers who are Montana from our multifamily and housing choice voucher program. We also have accounting staff involved in various levels for W-9 and electronic fund transfer, compost checks, and some manual payment processing. And our administration team has been taking call volume, a much higher increase of call volume due to the program. Go ahead, Julie. I'm going to stop my video because I'm getting a notice of unstable internet. And I see that Julie advanced the slide. So if my internet pops back up again, I'll put my video back on. Application status as of yesterday, we've received about a little over 1,100 applications. Approximately 150 have been approved for nearly $300,000 of funds awarded. And we have over 800 applications in process. So similar to phase 1, some challenges have included the time needed to process incomplete applications and gather information from applicants directly, as well as the challenges with a third-party landlord or mortgage servicer. So because we're have a partial payment that could be issued, we've needed to do a lot of outreach with mortgage servicers about the design of the program, how are the funds being issued, what payment advice would they be receiving, and so that's involved a lot of outreach on our part. And then we have about 200 inactive applications. So there's those initial threshold eligibility questions. So we did have some applicants who didn't pass those threshold questions, but they're still able to submit an application. And so a number of those were kind of automatically ineligible from the start, and then as well of applicants that we've reviewed that didn't meet the eligibility criteria. Go ahead, Julie. All right, so I've still spoken a little bit about some of the challenges of the program. Phase 2 is primarily an online application portal. So we're working with a company called Submittable. They're based out of Missoula, Montana, and they've been really great to work with. But we know that we have applicants throughout the state that maybe have limited internet access or only through a mobile device, or just are not as familiar with technology and the kind of steps it's taking to upload documents and that sort of thing. And so folks are having some trouble navigating the online application portal. We can direct them to Submittable for customer technical assistance, and our internal administration staff is also taking calls and trying to help people navigate through the process. Again, the timeline to gather missing or incomplete information. So unlike some programs where there might be a hard and fast, like you've got 5 days, and if you don't, and then you're cut and you're denied, we're really trying to work with applicants. So we give 10 days to provide additional information that's requested. Then we'll give another courtesy 2 or 3 days to say, hey, kind of last chance. And then we have denied some applications because we, after making those multiple attempts and reaching out via email and often via phone as well, we're still not hearing back. So it's really not something that we like doing as reviewers, to deny an application because of incomplete information, but unfortunately sometimes that has happened. And I mentioned the challenges with the way the system's set up. So when the applicant submits their application, they're asked to provide an email address for their landlord or mortgage servicer. And the system automatically generates a W-9 and electronic fund transfer form that is emailed to that third party. And it asks them to complete that information and send it back. Well, in some cases, large banking mortgage servicers firewalls are preventing those emails from getting to them or from opening the links, or the applicant isn't sure what email address to use for their mortgage servicer or landlord, or maybe the landlord doesn't have an email. So again, we've engaged in a lot of education and outreach with mortgage servicers and with landlords to try to work through those issues and find any workarounds that we may need to, including, if that needs to be gathering a W-9 via hard copy, we'll do that. And then setting up the whole payment processing. The other COVID relief grant programs are issuing funds solely via electronic fund transfer. But we know for our program, landlords and mortgage servicers needed the option to accept payment by check. So that was an additional element that was built into this program, as well as the payment advice that would be received by that third party, so they would know how to apply the payment. And then finally, the anticipated volume of applications. Right now, I think I mentioned that we have just over 1,100 received. It doesn't seem to reflect the anticipated housing needs that we had going into the program. So that's something else also that's a challenge. Go ahead, Julie. Some opportunities. Montana was actually one of the first states in the nation to launch a CARES Act coronavirus relief housing assistance program. And we've been contacted by 5 other states and done, Zoom meetings with them, provided them with how we've set up the program. And we were also asked to present on a national low-income housing coalition call on coronavirus and homelessness and housing. So other states are looking to Montana for how we've established our program and what steps we're taking to address some of the challenges that we've experienced. We've been asked to share our contact list of mortgage servicers for what we've worked through, how our program parameters are set up, and how are things working. So I think Montana should be really proud of the fact that we were able to launch this program very quickly. And although there has been some challenges, other states are looking to us as a leader in these types of programs. So finally, I have a call to action to all of you on participating in the conference today. So we're going to be distributing with the survey a copy of our Emergency Housing Assistance Program marketing flyer. We're also going to be mailing out hard copies to food banks and field agents and other organizations throughout the state. But we'd really request your assistance to post and distribute that marketing flyer. And please like and share our social media posts about the Emergency Housing Assistance Program to help get the word out to your networks and people that you know that maybe have been impacted. And if you're in a position to assist or navigate clients through the application process, that's also tremendously valuable and helpful. Helping them gather their income documentations and figuring out a good contact, including email, for their landlord or mortgage servicer. And finally, if you work with landlords or are one yourself or a mortgage servicer, if you can promptly respond to those email notifications for that W-9 EFT request, that helps us process the applications. If you have questions about that, I know we have a number of mortgage servicers that we're working to have some conversations with over the next week or so to make sure that they have an understanding of the program and what's needed, and so we can come together for some solutions to make sure we can jointly assist their borrowers. So that's my presentation, and I haven't been keeping track of time. So we do have one poll question, and oh great, and it pops up here from Michelle. So we'd like to hear from you. Based on feedback you may have received, do you think one of these options below could be a potential factor in limiting our application pool? So eligibility criteria and the $10,000 premium savings limit, maybe lack of knowledge about the program, challenges with an online application or technology, a general concern or hesitancy to apply for a government program. Maybe they're receiving financial support from other personal network, or financially stable due to receiving that $600 a week enhancement, or not experiencing a sense of urgency due to participation in a forbearance program. So we really appreciate your response to this poll, and that'll help us kind of continue to assess the program and and figure out, are there other things that we can do? We are looking at additional marketing now, including a public service announcement to run for the month of July. So thank you so much for your feedback, and I'll turn it over to Julie and Libby, and then we can get to questions at the end.
Good morning, all, and thank you for the invitation to Kaya for this invitation to speak to you at the Montana Housing Conference. So my name is Libby Starling, as Julie said early on, and as you can see in the slide in front of you, and I'm the Community Development Manager for the Federal Reserve Bank of Minneapolis. And Kaya and the NeighborWorks team asked me to give some additional national and federal context to the trends that are happening in Montana. Julie, next slide. So I do work for the Federal Reserve Bank of Minneapolis, but the views that I'm sharing with you are mine alone and not necessarily those of the Federal Reserve Bank of Minneapolis or the Federal Reserve System, a disclaimer that we are asked to provide. Go ahead, Julie. So what I'm going to do is go over some pieces about what's happening in the national state economy, what we're seeing in the housing market, and some additional trend points. Talk a little bit about the policy solutions that are now in place, and then spend some time talking about what lies ahead, which is specifically looking at what happens come August when there's some changes ahead. So hoping to ask some questions and leave you all in a shared sense of curiosity about the future. Next slide. So although we're talking about housing in a COVID context, I think it's important to note that even before the COVID-19 pandemic hit, housing and affordable housing specifically was not in a surplus situation. So low and moderate income households were facing significant housing cost burden in Montana and across the country. Next slide. And housing prices were growing at a much higher pace than median household income over the last 20 to 30 years. So before the COVID-19 pandemic hit, affordable housing was a challenge in Montana in particular and across the nation. And then, next slide. A few months ago, we all learned to recognize COVID-19 and the effects that that has had on our economies. Next slide. So the key thing is that we're seeing unemployment at record levels. So the visual that is in front of you is looking at continued unemployment claims. So not just the people who are initially trying to claim and applying for unemployment, but the people who are in fact receiving unemployment. And so here you see the significant spikes in unemployment, Montana in the gold color, US in the green color, that happened particularly in April with the rise of claims resulting from job loss and financial hardship with shelter-in-place orders. Julie, if you would tap ahead. And for context, the previous maximum number of continued unemployment claims in Montana is the blue line, so a little bit about 25,000 claims. So what we're seeing in terms of continued claims in the current situation is about 150% higher than the previous maximum. So unemployment is at record levels in Montana and across the country. So with this job losses, next slide, we're also seeing that the monthly unemployment rate, so the share of the population who are out of work, has skyrocketed. In April, Montana reported an 11.3% unemployment rate, lower than the nation as a whole, but still about 3 times higher than the unemployment rate in the previous months of 2020. So job loss have been significant. The May numbers are not yet out for Montana. And then as we see what happens in the months ahead, I'm anticipating that the numbers will continue to decline slightly, as we're seeing with the national numbers, but the Federal Reserve System is currently anticipating that nationwide unemployment will be just under 10% by the end of the year. So we are not looking at a rapid recovery from the financial hardships caused by COVID-19. Next slide. So Julie and Cheryl talked a lot about some of the specific housing and community development programs that have been funded through the Federal CARES Act. But I want to talk a little bit about some of the broader response, which has really been focusing on getting money into households' hands and employers. So there are three specific broad federal policy responses that I do want to call out specifically, and Julie and Cheryl certainly mentioned each of these specifically. So the first, of course, is the coronavirus stimulus checks. So up to $1,200 per person, additional funds for dependent children. This was a significant stimulus directly into the hands of households and household finances. The second, something that Cheryl mentioned, is pandemic unemployment assistance. So for those individuals who are receiving unemployment, so that large number in my previous chart, individuals are eligible to receive an additional $600 a week while they're claiming unemployment. So this again has been a significant amount of money going directly into people's pockets. And for many low-income workers, the amount of money that they're receiving between unemployment and pandemic unemployment assistance may in fact be larger than the amount that they're receiving while they're previously employed. So there are some perverse incentives around labor force participation with pandemic unemployment assistance. But having that extra $600 a week has been a significant benefit to households, particularly low and moderate income households. And then the final piece that I want to call out is the Paycheck Protection Program, which is a small business assistance loans through the Small Business Administration that are forgivable to the small business if they are primarily used to retain payroll. So the Paycheck Protection Program is a means of keeping people off of unemployment and keeping people employed by providing loans that become forgivable, aka becoming grants, if they are used primarily to retain payroll and keep people employed. So collectively, this set of federal responses, in addition to the programs that Julie and Cheryl talked about, has been about getting money directly to households and helping people benefit financially during this time. So the impact of these, next slide, Julie. So the first thing is that we're seeing late payments on mortgages rising. So between March and April, late mortgage payments, that is the share of payments that are greater than 30 days late, increased nationally from 4.6% to 7.7%, and in Montana from 2% to 4.5%. So this is looking at late payments in terms of time. And so a good number of these households are taking advantage of the mortgage forbearance programs authorized through the CARES Act, so that households who have a mortgage that is federally guaranteed, similar to the Montana housing loans that Cheryl was talking about, do have the opportunity to request from their mortgage company or their mortgage servicer forbearance, so a suspension of paying their mortgage payments for the next few months. So what we're seeing is that households are taking advantage of this opportunity for forbearance and delaying and deferring their mortgage payments. However, we're also seeing, next slide, that delinquencies for other credit sources are not increasing. So unfortunately, I was unable to get permission to share the data that I wanted to share on this slide. But we have data that tells us what share of credit card payments are delinquent and what share of auto loan payments are delinquent. And as we look at January, February, March, April, the first 4 months of the year, what you would have seen had I gotten the chart was in fact a very boring chart, because there's been no increase in delinquency for credit card payments and no increase in auto loan delinquencies. If anything, delinquencies on credit cards and auto loans are going down during this time of pandemic. So our hypothesis right now is that households are taking advantage of mortgage forbearance to delay mortgage payments, but they're taking advantage of having the extra money, whether that is the coronavirus stimulus checks, whether that is pandemic unemployment, and catching up a bit on some of their other household debts while they can, anticipating that over the next few months, they may be in greater financial straits in the future. So at this point, delinquencies for other credit sources are in fact going down. So this has been looking at the household credit side and mortgages. Next slide. We also have data looking at rent payments. So this is data through the National Multifamily Housing Council. And the survey that they do tends to bias toward larger property management companies, larger apartment developments. But overall, as they're looking at rent payments over the last few months, April, May, June, comparing the 2020 numbers to the 2019 numbers, overall, while there's been some fall off in rental payments, overall rental payments are holding far more steady than anyone would have anticipated a few months ago, when there is significant concern about the loss of rental payments. Next slide. We can also look at this data in terms of the share of people who are paying rent by the 6th of the month, by the 13th of the month, by the 20th of the month, the 27th, and the end of the month. So the small green lines at the end are comparing our April 2019 numbers and May 2019 numbers down to 2020. So you can see that there is some fall off, again, in terms of the overall numbers, but overall, most people are approaching, and by the end of the month, are remaining largely caught up on their rent. Sorry, I clicked the stop my video. So there is a caveat on this, which is that the overall numbers are looking at Class A properties, Class B properties, and Class C properties. So the determination of whether or not a property is Class A, Class B, or Class C is largely determined by the rental property owner or landlord. But in the data sources that look at distinguishing across property types, there is evidence of increased non-payment, particularly in Class C properties. So these are more likely to be the older, these might be our naturally occurring affordable housing properties, these might be the mom and pop landlords. And here, pre-COVID, the payment rates for Class C properties lag behind the Class A and Class B properties by about 5 to 6 percentage points. Right now, however, in the most recent data, the lag is about 10 to 11 percentage points. So Class C properties seem to be lagging behind more in terms of the percentage of households who are paying their rent or who are paying their rent in full. So this is something that has just begun to emerge in the last month or so. And just to respond to the question I happen to see, Class A, Class B, Class C is in the eye of the beholder, but Class A tends to be the newest, tends to be the highest finish, tends to be more of the luxury apartments. Class B is in the middle, whatever that looks like. And then Class C properties tend to be older. They are likely to be smaller units. These are units that don't have the newest finishes, newest appliances. And in many cases, these are more likely to be what we think of as the mom and pop apartment buildings versus the ones that are new, aiming for the young professional audience. So Class A, Class B, Class C, again, there's no official definition. Property owners can decide how they want to classify themselves, but the key thing is that in Class C properties, that is where we are beginning to see evidence of rent payments falling behind. Next slide. So when we're looking at the array of federal assistance that is currently available to households, so looking at households using their savings, using what they can generally expect from unemployment insurance. Of course, unemployment insurance payouts do vary according to different states, but typical estimates of unemployment, the pandemic unemployment assistance, the extra $600, and the COVID stimulus checks, that $1,200, we see that a significant increase in both homeowners and renters are able to cover their household expenses for 1 month or 3 months. So without that extra federal assistance, only about 40% of renters would it have the savings to cover their household expenses? With the additional federal assistance, that number jumps to 93%. When we're looking out over 3 months, so looking out on the right, without the extra federal assistance, only 1/5 of renters would have enough savings in order to maintain their monthly household expenses if they lost their job. With the additional federal assistance, that number jumps to nearly 4 in 5. So a significant increase because of the additional federal assistance that is currently available. Now, next slide. Now, the key question is to think about what lies ahead and what happens after this curve as we're looking out into the future. So, next slide. Landlords, and I'm sure many of the landlords who are participating in this conference recognize this, and I hope that you'll be willing to comment during either in the chat or in the Q&A. But the COVID-19 pandemic is leading to an array of short-term costs for landlords. We've already talked about the rent non-payment that is currently being seen, but there's also increased operating costs. In particular, landlords are seeing increases in property maintenance costs through expanded cleaning, expanded security needs, changes in costs. So we are certainly hearing that many tenants are unwilling to report maintenance unless it is an emergency. So there are some changes in the distribution of how maintenance costs are playing out. And then landlords, in many cases, because of whether it's the Federal CARES Act or various state emergency declarations, are unable to evict tenants, and they're forgoing late fees again as part of this, part of the overall COVID response. So there's an array of short-term costs. Certainly some developers and building owners are concerned about how these array of short-term costs will add up, particularly if we're looking at the short-term costs over the next 6 to 9 months. Next slide. Next slide. The other piece is looking out at some of the long-term concerns about landlords and more broadly on housing developers. So right now we are seeing changes in tax credit pricing and the overall array of how much, what the value is of tax credits and how that converts into resources for development. So there is concern about whether or not there'll be as much equity available for new affordable housing development. And more broadly, there are concerns about equity, not just in tax credit markets, but more broadly in terms of equity to support multifamily development. So we're seeing some shakeout with the overall economic transformation of how much equity there'll be available for future. Certainly across the country, there is continued need for affordable housing development, even before the COVID-19 pandemic. And certainly as affordable housing development can be a more secure investment than some others, there could be opportunities for more equity coming into multifamily. But in general, we're in a point of transition, and in that transition of uncertainty, we're not sure exactly how things will shake out. The final piece is that landlords, as they're renewing leases, because there's more lease renewal, more stability in the rental market than tenants who are interested in moving and relocating if they do not have to. But landlords are also, because they're renewing leases and when they're doing new leases, are charging lower rents or not introducing rent increases. As a result, this collectively leads to less revenue coming into landlords. And again, in combination with the increased cleaning and maintenance costs I mentioned previously, renting is a less financially rewarding line of work than it might have been just a few months ago. So overall, there's transition and uncertainty about what will happen in the rental market. Next slide. Transitioning into home ownership. In addition to the forbearance on mortgages that is required under the CARES Act for federally guaranteed mortgages, some large national lenders are offering additional mortgage forbearance to their mortgagees, regardless of if loans are federally guaranteed. And one piece of this is that in the foreclosure crisis a little bit over a decade ago, the overall housing market learned that foreclosure costs a lot of money. Not just the impact on the homeowner, but also the impact on the lenders, the impact on housing stability, the impact on house prices overall. So right now, I believe that we're seeing increased interest in avoiding those longer term costs of foreclosure. And with that interest in avoiding foreclosure, lenders are more willing to negotiate and more willing to work with their borrowers in order to avoid those costs. But there is some question about how long this will last and what the overall impact of this is. Next slide. Just yesterday, the Urban Institute released some analysis that they've done looking at renters, primarily lower and moderate income renters, and comparing the costs of the overall strategy that the federal government has largely talked about in terms of providing income support to help renting households remain more financially whole versus the cost of providing rental assistance. Similar, I suspect, to what Cheryl talked about in terms of what Montana is doing, in terms of what is the most financially efficient way of helping renters at least remain at their pre-crisis rent-to-income ratios. The key thing is that in terms of the overall national cost, it is much more financially efficient to provide rental assistance and help renters close the gap between what they're able to pay and what their rent or housing costs are than it is to continue to provide the level of significant income support that we've seen over the next few months. So this could be a piece of conversation that is happening at the federal government as we look into what the next stage of coronavirus relief looks like. Next slide. So with this, we're looking backwards on one-time federal stimulus payments. So I think it's highly unlikely that we'll see any replication of the $1,200 stimulus checks. Pandemic unemployment assistance expires on July 31st. So after that, people who are unemployed will only be able to access whatever their state weekly benefits are. So the $600 expires then. The small businesses who are using Paycheck Protection Program in order to retain their employees generally have to retain their employees. Originally, it was 8 weeks. It's now been increased to 24 weeks. But that 24-week window, again, is going to expire. And then the federal eviction bans that are in place for properties with a federally backed mortgage, those expire on July 25th. So when we start looking ahead at August, when households have generally spent their federal stimulus payments, when pandemic unemployment assistance is no longer eligible, as employees who have been retained through those Paycheck Protection Program loans becoming grants, and the end of federal eviction bans, we are looking at an August that could be much more unstable while economies are beginning to open up and job losses are reversing slightly. We're still looking at overall record high unemployment, still record high number of people who are not working, who are not bringing in income, and who still need to pay their rent or their mortgages. So I think the key question is what's going to happen in August and September as the federal assistance programs that have helped us stay afloat to date start to run out and start to expire. Next slide. So finally, I believe we're all ready for questions. Additional information can be found from me at minneapolisfed.org. Thank you, Julie. And if you're interested in staying up to date on the work of the Minneapolis Fed, do go to minneapolisfed.org/subscribe, and you can sign up for our email lists and be the first to find out about additional resource and analysis that we are releasing. And now we are collectively prepared to take your questions.
Great. Thank you guys so much for a fantastic panel. We do have quite a few questions that have come in. Julie, I am going to start with you on the questions since you are our first presenter. Julie, can you confirm that there are no on-site inspections going on right now?
That is true. The Department of Commerce housing staff is in the Community Development Division for the home program or for the Community Development Block Grant programs. We will not be conducting on-site inspections through the end of the year.
Great, thank you for that. And Julie, also for you, can an agency in an entitlement city apply for state home or CDBG funds if they serve a multi-county area?
Yes, so for Community Development Block Grant, you still would have to get a county to sponsor that grant for you, and you could apply to the home program as a nonprofit.
Great, thank you so much. And guys, just a heads up, if you guys do have more questions, please feel free to put them in the Q&A section and we will get those. We have a little bit of time to do that. Cheryl, next question's for you. Can you share with everyone if there have been harder hit areas than others? Have you guys seen a concentration of applications coming from one particular area over other areas? And can you speak to that?
We haven't really looked at the full analysis of the county breakdown yet, but the state does have a transparency website for all of the COVID relief grant programs, and the emergency housing assistance program will start reporting our county distribution breakdown on that website starting next week.
Great, thank you. And have you seen a higher or lower than expected number of applications?
I think given that we launched on May 7th and that our application volume is a bit over 1,100 applications, we would have anticipated a higher volume at this stage in the process.
But helping you guys out with, sharing it is some of those things that you've mentioned for us.
Exactly.
Great. And then there was another question for you, Cheryl. Will there be increase in phone access for renters who prefer to apply by phone? Is there a mail-in way? Can you talk about some of those options for renters that might not be able to access the internet application?
So we don't have an option to apply by phone at this stage because the application process involves providing income documentation, their mortgage statement, their lease agreement, so documents need to be submitted. We do work with applicants who don't have internet access and don't have an email and can't complete an online application. They can talk through those technical assistance challenges with our administrative staff, and we can mail them a hard copy application and they mail it back to us. They would need to mail their documentation along with it. The challenge with that is then our administrative staff are adding their application to the online portal because we need to track all of the applications within one system just for accounting and auditing purposes, since there's a payment interface between the application portal and our state of Montana accounting system for the issuing of payments. So there is some cumbersome nature with that, and we need to have a functional way to be able to message back and forth with the applicant. So if they have an email, we really want to work through any technical assistance issues they may have in doing the online application as the most expedient way. It could be that they're using Internet Explorer, which isn't a good browser for this. They may need Chrome or Firefox. There are some compatibility issues with mobile devices, so using a desktop is preferable. So we want to be able to explore those options and troubleshoot to enable people to be able to do the online version to the greatest extent possible. But we do have a hard copy application for folks that there's no way that they can do it that route.
Great, thank you so much. And then one last question for you, Cheryl. Can you clarify the number of children in a household? Does there have to be children? Does there have to not be children for the assistance?
So under the phase 1 program that utilized that $430,000 of the Montana funds that had been allocated to Montana housing, there did need to be at least one minor child in the household, but there are no household type requirements for the phase 2, the $50 million into the CARES Act. So with children, without, seniors, persons with disabilities, all household types can apply.
And then one question that just came in for you, Cheryl. Are there local organizations applicants can go to for assistance with online challenges?
Yeah, that's a great question, and something that we're talking about at our supervisory review level. We also received some recommendations from the Montana Housing Coalition yesterday, kind of speaking to that point. So I think that's something we're going to be talking about in a bit more depth, and hopefully getting some information out to communities on maybe how they can help steer people in a way to, if they need assistance with the online application, where's the best place to go for that.
And because people have more questions for you, we're just going to keep you on for a second. Can you further describe additional or specific experiences supporting people with disabilities in the application process? For example, people who need screen-ready or large font versions of the forms, individuals who may need help completing the application process. You kind of just touched on that, but could you talk about that?
No, I don't think we've had any specific cases of individuals who needed adaptive technologies in order to complete the application, but our staff, both either the submittable technical assistance customer service or our administration staff, have spent 25, 30, 35 minutes on the phone with an individual applicant many times to help them troubleshoot. The submittable platform also has a number of help articles to kind of help people through the process. How do you upload a document? What documentation or what document types can be uploaded? So we're directing folks to those to the best of our ability.
Okay. And Cheryl, is there a way to include a supplemental secondary contact person for emergency RA rental assistance relief funds, i.e. a case manager?
Another good question. That one hasn't come up yet. No, there isn't a question specific to that in the application process. They do have a release of information for us to talk with their landlord or mortgage servicer, but we don't have a mechanism for a release of information to talk with a case manager or provider, but that's certainly something our review team can talk about.
Okay, and can a household experiencing homelessness apply for this program when they haven't yet been approved for housing?
So in order for us to make a payment to a landlord, we would need to have them at least have a unit identified, since that's the payment. But they could have a unit secured with like a proposed start lease date, and we could accept that application and process it for both security deposit and rental assistance.
And maybe the last question for you right now, what time frame is being used for the time of COVID-19 impact? April 1 to present, or when does it go back to?
We can support households for their rent, mortgage, security deposit due April 1 into the present.
Okay.
And I just wanted to add a caveat on assisting households who are experiencing homelessness. Again, one of the requirements of the program is that there needs to be that nexus between the COVID emergency and the financial hardship they're experiencing. So if it's a person that was zero income or on Social Security disability, who may be homeless that hasn't experienced a COVID-specific financial hardship, then they don't meet the particular eligibility for this program, which is unfortunate because we would all like to help that population, but unfortunately with this fund source, we're not able to.
Okay, and one more for you. Can pregnant women apply for the emergency housing assistance that have no other minor children? So they have no other minor children, but they are pregnant. Can they apply?
Under phase 1 of the program, yes, they could. That phase did stop taking applications on May 7th before we started the rollout of phase 2. So they should just apply directly to phase 2. Okay,
and last one for you. Does Montana Housing plan to coordinate with DPHHS or other state agencies who might also be working with the same clients who are eligible for assistance?
We have had conversations with DPHHS, including when we launched the TANF program, and this program, our application includes, asking if the family is receiving emergency solutions grant. There are some requirements that we don't duplicate fund sources, so we have been coordinating throughout the process.
Okay, we're going to move to Libby really quickly because hers is just a yes or no. Libby, will you be sharing your slide deck information? We, on our end, will update it, but there's been several requests for sharing your slide information. Are you comfortable with that?
Absolutely, absolutely.
We will make sure to do that. Quick question back to you, Julie Flynn. Is the CDBG planning grant application deadline still September 15th?
No, we're expecting that deadline to be later this fall, so probably October.
Okay, and there was a couple questions clarifying for you on the inspection information. Could you go back to that? I know you typed it in the chat, but can you share that with everyone for us, please?
Certainly. So when I was talking about the inspections, on-site inspections being postponed, that is for our ongoing properties, for our rental properties. So HUD has not waived the requirement for rental homes that are being initially rented And for homebuyer assistance, they still need to, those homes still need to undergo the proper inspections prior to home funds being invested.
Okay, and this one is for all the panelists. Can you guys talk through your communication of impacts, issues, et cetera, with elected officials for future resource allocation?
Great question. I participate in a daily COVID grants call with all of the different program and project leads on the different COVID relief grant programs throughout the state. And that includes representatives from the governor's office. So we're talking about the administration of these programs and how are they working? Are there things that we need to look at or adjustments in real time? And so as we look at what the response has been and how the programs are working, we're engaging in conversation on a daily basis.
I would say the same applies for the Community Development Division. We're keyed into that leadership group. Thank you.
And I will say that while the Federal Reserve System is available in the various states as a resource, I think our greatest source of impact is working in Washington, D.C. So partnering, so the work I mentioned from the Urban Institute was there are staff from the Federal Reserve System that worked in a working group that led to that analysis, and there are other national working groups looking at what the national impact is and using that analysis to inform new federal policies coming out of DC.
Great. We have about 5 more minutes and we have a lot more questions for you guys. Just to let you all know, if we don't get to your question, we will make sure to answer it after. So this question, Cheryl, is for you. Can you clarify that the assistance is available until the funds run out rather than a certain date?
So I think we had a requirement to allocate the funds, by the end of the year, so December 31st. So we'll again be looking at kind of real time, how are we spending those funds, and really working to get additional marketing out to increase application volume so we can try to affect and support as many Montanan families as we can. So applicants that have applied now, if they continue to have a COVID-related financial hardship, we can continue providing that monthly assistance through the year.
Great. And as we move to the potential for concurrent health risks coming from wildfire season, are there any supports for households to improve air quality systems?
I don't know of any specifically, but that certainly is excellent feedback that we can provide to our leadership teams.
Would inmates required to exit the jail system qualify for the Emergency Homeownership Assistance Program?
The Emergency Housing Assistance Program?
Yeah.
I think there would again need that nexus between the COVID emergency and the financial hardship they're experiencing. So I'm not sure what their situation may be, but we would just need to work with that applicant to see what that nexus is.
Great. Next question. Some property owners with short-term rentals like Airbnbs have shifted to long-term rentals due to tourism kind of falling off right now, when that's usually a big thing for us. Are there any efforts to reach out and inform them of housing support options?
That has not come up as a question. And our program does require a lease agreement or mortgage statement. So I'm not sure in a long-term situation with an Airbnb what sort of agreement is made with the Airbnb owner. Airbnb owners can apply for the Business Stabilization Grant, which is another COVID relief grant. And in fact, we've gotten quite a few applications from them, given the impact on the tourism industry and what they're experiencing.
Great. I think we've made it through all of our questions. You guys, thank you so much, Libby, Julie, Cheryl. We really appreciate the time you've taken. We just had one more come in, and I think we have 1 minute to answer it. Can a tenant apply for housing assistance program if they have already paid rent for April and May? Can the assistance be backdated if they can prove the financial hardship?
We will work with applicants who maybe they had the financial impact, but they were under a lot of pressure to pay their rent. And so if they can demonstrate that their income was affected, we can still issue that payment. It would be made to the landlord, so it would potentially result in a credit on their account, but then help them get caught up, because we know folks had to dip into their savings or had to borrow money from friends or family or their church or other networks. So we'll work with them.
Great. And we're going to take the rest of the questions to the website at this point. So we're going to bring Kaya back, I believe, before we head into our next, all of your fantastic information.
Thank you.
Thanks so much. Wow, what an incredible brain trust and amount of information that we just heard. And I just from the fantastic questions from all of you and emails I've been getting, I hope that was valuable. Like Katie said, we'll share responses to everything and answer the rest of the questions on the website. Some of the things that I heard, it sounds like we're in a relatively good situation right now, although unemployment is really high. Late mortgage payments are rising, but rents are staying steady. And what I really heard from Libby is we're all focused on August and September. What happens as the current supports and stimulus starts to decrease or sunset? So just a plug for everybody to think about what is the role that you can be playing now to prepare your organizations, your clients for what things might look like in August. I know at NeighborWorks Montana, we're really focused on our education and counseling supports and working with many of our partners on what does eviction prevention look like? What does foreclosure prevention look like? None of us has a crystal ball, but we have some really good ideas and some sense from folks on the panel and from all of you in the state on where things might be headed. So just a plug for think about what role you can play to create resiliency and supports for your clients and communities. And we had some really specific asks from Cheryl. That flyer, we're going to distribute that on the website. We really encourage you to get that out. I don't know if you noticed in the poll, but a lot of folks said awareness and outreach is maybe one of the barriers here to getting those housing assistance funds out. So let's all play our own part in raising awareness and getting that in front of clients. I know I've heard from some service providers who are already helping clients navigate those applications. I know the Missoula Food Bank just helped, I think they said 4 clients access that application last week. So all of that can really make a difference to get those funds into the hands of the folks who really need it. Just some encouragement and thank you to folks who've been participating in the chat and the Q&A. Just a reminder, the chat is really for communicating resources, ideas that you have. We know that the panelists are just one set of the brain trust we have in the room today. All of you have incredible experience and resources to share. Please don't be shy. Click that all panelists and attendees, tell us what you're doing, tell us what you're seeing on the ground and what resources you have to share. We want to see all of that. And the Q&A is really where we want to see those questions directly for the panelists. Okay. I also just wanted to make a little bit of a plug for the Montana Housing Coalition. That's a group of folks, many of you are on the call, who are really focused on what more can we be doing at a state level to support and advance homes that are affordable for all Montanans. If you're not familiar with that group, encourage you to take a look. Some really great conversations are happening there around what more can we be doing and what roles can we all play. All right, a couple other little bits of housekeeping and then we're going to give everybody a break. So you'll notice on the agenda we have structured the day with 30-minute breaks between sessions. We really want to give you a chance to get up from your computers, stretch, eat, check your email, but really get up from your computers. And just a reminder to make sure that you keep your devices plugged in, your computers on. We ask that if you're planning to attend the ongoing sessions today, that you just stay logged into Zoom. You can turn your volume way down, you can minimize your screen, but it'll just help us a little bit with managing the technology if we don't have everybody coming in and out every session. You are not going to want to miss our next session where we will hear the latest research from the Bureau of Business and Economic Research about housing in Montana, and we'll get up to speed on all of the great work happening to make stronger connections and better supports that link health and housing for Montanans. And if you are looking for a great way to spend some of the next 30 minutes, we wanted to draw your attention to the webpage where we have, I am going to try to share my screen seamlessly. Ta-da! So if you're on the MontanaHousingPartnership.org website and you click here on impact projects. This is a new thing we wanted to try this year to get more opportunity to for folks to share what they're doing across the state. And there are 10 amazing projects and programs here that are beautifully summarized and presented. Thank you to everybody who submitted these. And you can look at each of these posters, or you can look at a PDF of all of them. So here's the first one. Trust Montana is developing a new scattered site program that will allow clients to find a home on the open market and receive essentially down payment support in exchange for creating a underlying protection for permanent affordability and limited equity increase. So you can learn more here. Again, 10 projects, please check it out. There's some really great stuff there. Okay, and with that, I think we are ready to go to a break.